Investors and traders, welcome to the channel. Today is 22nd of September 2024. Hope everyone is having a great weekend. We will be taking a deep dive into the US markets, in particular the US stock market, the indices. We'll be taking a look at the futures charts, some of the cash indices charts, and then we will also take a look at some of the sectors. And as always, this video is for educational purposes only and it's not financial advice. So let's start by taking a look at the NASDAQ 100. So this is the daily chart. Something really interesting happened last week, in particular last Friday for NASDAQ. One of the things is that you can see that ever since Fed came out on the 18th of September, the market went kind of sideways and actually closed negative for the day. But the following week, there was a really strong momentum to the upside, so a lot of buying came in, but it stopped right exactly at the 78.6% retracement, and this is where we had drawn this box, and we were looking for the price to get into this, and I view this as a gap formation. So market has actually gone into it, and I was thinking that maybe it's able to actually get towards the half mark out of it, or maybe even slightly higher towards the upper end of it. But what transpired last Friday is that the market did a inside bar, so, and also closed lower for the day, and it is still being held back by the 78.6% retracement. So that appears to be a resistance level that the market needs to overcome if it is likely to move higher. But on the intraday basis, it's also really interesting what happened. So let me actually show you on the 15-minute chart. Let's go down here. So this is the low on Friday. Friday was a particular day because it was the quad witching. So we had the options and futures expiring, and it was just quite a lot of volatility. Very volatile day, in fact, last Friday. And when the market opened, actually, so I'm in the United Kingdom, so the time that you will see is actually in the British summertime. So the market actually opened around here, and then it just started to fall, and it was a pretty significant fall in NASDAQ. But it also actually stopped falling right here. There we go. Which is actually 38.2% retracement. Here we go. So this is where the exact low came in intraday for NASDAQ. And this also marked the low for the other indices such as the S&P 500 and also for example, the Dow Jones. So sometimes if you guys, I don't know how many of you actually watch these intraday, but if you're watching, sometimes you'll know that actually it is the NASDAQ which sets up the agenda, and sometimes it is the S&P 500 as well if it hits a key level. But last Friday it happened to be NASDAQ, and as soon as it hit that, that was the bottom in the markets, but it's still, it closed its day negative, which is NASDAQ 100. So the significance of this, in my opinion, is that if the market takes this low out to the downside, then in my opinion we're looking for further downside to take place, and then the market could in fact be doing an ABCD kind of a pattern like this. Here we go, like this. Which could in fact see the market actually go down to 19,700 roughly speaking. So the key thing is that on the daily basis, let me actually move back to the daily chart on the NASDAQ 100. Here we go. Because the market for 2 consecutive days is closing below the 78.6% retracement, so don't be surprised if the market opens tonight with a bit of a gap to the downside, and the reason from a technical perspective is this 78.6%, which is acting as a resistance. Now let's move to the longer term weekly chart. So this market has completed its big ABCD here. Not going to go into the details of this pattern because we've discussed this many times on the channel. And here you can see where the 78.6 retracement is. So it really needs to get above this one on for the market to move higher. So this is what we are looking at, the NASDAQ 100 in the futures market. And now let's move over to the cash market. So let's take a look at the S&P 500 cash. By the way, I did a video for the tech stocks yesterday, and in that we took a look at the NASDAQ cash market, which is NDX, and also the QQQ and the XLK. So I'm not going to go into the details of that in this video. So I would highly encourage you to actually watch that video to get more perspective on from a technical and analysis perspective for tech stocks and some of the tech ETFs as well, such as QQQ. So for the cash for the S&P 500, we are watching for the possibility of this ABCD pattern, which is in this black color, to be completed around 6100. So that appears to be a target level, and the market seems to be slowly but surely marching towards it. But there are a number of resistance levels that the market needs to overcome in order to be able to move towards those targets. Now, in NASDAQ has already completed its ABCD, and if the S&P 500 is able to do that, then that will be the second market completing this big pattern. And we'll also take a look at the Dow Jones after this one. So what it means is, from a pattern perspective, where the market is now and where the target is, just doesn't appear to be too much of an upside. That's the key takeaway from this chart. So we have maybe 300 to 400 points to the upside, which may seem quite a lot, but look at where the market was back in October of 2023. So that was kind of the best time to be actually getting long this market, and here it is where the risk for having a significant pullback is increasing. And look what happened when in July, and the pullback that we had here, it was really quick. So we'll just be watching our patterns really carefully. And on the daily chart, let's have some smaller or shorter time targets for this market. One of the things is that this market found some resistance from the 1.27 to expansion of this little swing here, which is what we saw, a pullback right into the 3rd of September lows, 6th of September lows, excuse me. And it appears that the market actually is looking to go towards this 5815 level, the one which is drawn here in this shadow region. I do have a ABC slightly higher as well, but this is the kind of shorter term target around 5810 to 5815. Above that, on the daily chart, we have some upward targets as well, but I would actually go with the 6100 from the weekly chart. Shorter term, this is what we are watching, 5815 for the S&P 500, for the S&P 500 cash market. Now let's move on to the futures. Now the futures, what we have going on is, if you look at the daily chart, this last Friday, just like NASDAQ 100, also closed a little bit lower, and it was a trading range day. And if we take a look at the 15-minute chart, the way we did it for our NASDAQ 100, the big difference is that this one did not do the 38.2% retracement. So this market was actually a little stronger compared to the NASDAQ 100. You can see that it missed it by about, the low was 733, the low was 733.50. So it missed it by about 7-8 points. Not a lot though, but the really interesting thing is how it closed. When it rallied in this, which appears to be an ABCD pattern, but it got tourniqueted a little bit earlier, right at the 61.8% retracement, and then it actually found sellers came in, or people who actually went long around these regions, and they took profits. So in fact, it closed lower. So just like on the daily chart, the NASDAQ 100 closed below 78.6% retracement inside bar for the second day. This one on the 15-minute chart closed below the 61.8% retracement. So we could in fact see some sort of a gap lower opening tonight because of the pattern formation. Of course, we'll find out when the market opens tonight. Now, in terms of the shorter term patterns, so 5th of August low, in my opinion, is a really key low, which till the elections, in my opinion, will probably be held. And then we have key timing coming in around 7th of November. We'll see what happens. So this, we are watching for this ABCD in blue, which also gets to about the 5,883 level on the S&P 500 futures chart, E-mini. We also have 1.272 expansion coming, so we'll have a confluence of 2 to 3 ratios. Just below that, we have the 1.618 expansion of the smaller swing as well. So I'll be watching 58.45 to 58.85 as the kind of a possible target if the market gets there. Above that, we have the 60.90, but on the weekly chart, let me actually move on to the weekly chart. We have this pattern that we had been watching, the bigger ABCD. Also completes around I believe it was 6100. Here we go. Yeah, 6100. So that's the one we'll be watching. And if the S&P 500 is also able to complete its bigger ABCD, it will be the second index which will be completing it in addition to the NASDAQ 100. And moving on to the Dow Jones Industrial. So this one we were watching for this level 41,983, which is the 1.618 expansion of this BC swing, which is highlighted in B in black. This is the entire 2022 bear market. So the market actually closed above that last week, and you can look at the pretty nice looking bullish candle formation here. So it does appear that it wants to go and perhaps tackle this 44,237 level, which will be the 1.618 extension of the AB swing in blue from point C. So that's the projection. It's just like the ABCD, but the CD leg is getting extended by 1.618 times of the AB leg, and all of this price action remains inside this CD leg, which is the black one. So this is how these patterns form. You have the bigger ABCD, and within that you have nested several smaller ABCD, and they seem to be getting aligned and moving towards that bigger completion of that bigger pattern ABCD. Now, if that ABCD is to be completed just like in the S&P 500, we could be looking at price getting into this gray box here. And the top of the ABCD comes on 47,375, and the market is about 42,436 currently. So it is roughly about 5,000 points. So is the market able to get there? We'll have to wait and see, but this is what the pattern is calling for, and this is what the pattern was also calling for NASDAQ 100 when we actually put that out as the kind of the target. Beginning of the year in February, even before that I believe, and it was quite difficult to actually perceive that the market could get there, but this is the thing with the patterns, and the market in fact did reach those levels. So for these, if the Dow Jones also complete this ABCD, it will be the third index to do that, and then we'll have three of the major indices, the S&P 500, the NASDAQ, and the Dow Jones coming in line at as far as the completion of the pattern goes, which means that they are actually coming in the harmony, and then of course completing of these patterns means that we could anticipate in terms of, in addition of reaching our target, perhaps this could actually begin to act as a possible resistance, and we could see trading range behavior to appear in the markets. But at the moment you can see pretty strong trend here, and of course between now and where those levels are, there are several minor resistance levels that the market needs to overcome. And for that, for the shorter term targets, we can actually move down to the daily chart and see that we have this purple ABCD here completing roughly around 43,250. So the market could actually get into this gray box. But where the market is stalling at the moment, In fact, is this this is where in July to the 5th of August pullback that we had, it's stalling at the 1.272 expansion of that. So it's a minor resistance here, and before that, we had some minor resistance coming from the expansion of this swing around here. So the market was not able to get above that for 2 consecutive days, and then last Thursday it went above that. So we'll be watching this. I think what we are looking to do is, once it is able to get above the 42,550 level, the next is 43,225 to 43,850 right in this box. So we'll wait and see what the market will give to us. Now let's take a look at the Russell 2000. Russell 2000 is much weaker than the broader indices such as S&P 500 and the Dow Jones Industrials. And of course NASDAQ as well, but NASDAQ is also making an internal retracement. Here you can see that it's doing this ABCD here, possible double topping formation, and this gray box is the region where the market can get to and complete this ABCD here. Moving beyond 2360, it looks quite challenging for this index. And then if we just move on to the weekly chart, longer term, that's the box we are drawn here. So it's most likely to get into this box, maybe make a little bit higher high, but I'm not really convinced whether it'll be able to actually even make this ABCD here. This blue one, because it all depends upon if it is able to break above the highs of 8th of November 2021. Now with the Federal Reserve embarking on the rate cutting cycle, that should in theory help the small caps, but whether the small caps will be able to lead the market, I'm not sure of that. So as of now, just keep on watching this. It does look maybe this trade of small caps actually begin to outperform. Not really sure if our pattern will get completed, but again, this is why we put these patterns out, because we have seen these getting completed. So we'll be watching for this 2318 to be taken out to the upside. Then it would give me more confidence that ABCD, the blue one that we are watching, is actually is more likely to get completed. But on the flip side, the point C, if as long as it remains above the 5th of August highs, the chances are we are in a trading range and moving actually in the CD leg higher. So I will not change the pattern. I think the chances are we might actually move higher. It just might be in a bit of a trading range, as long as the 5th of August lows are not taken to the downside, and trading ranges are pretty frustrating, as you guys know. But this index has been in a long trading range for a very long time. Look at this blue box here. So Russell 2000, yeah, it's not a fun one to trade or be invested in at the moment, but this could change. Now let's begin to take a look at some of the sectors now. So let's start with the real estate, XLRE, and let's see how the market actually took the interest rates decision. So we were watching for this pattern here, and in fact last week the market actually went above this and closed right here. So I think we'll just keep on watching this, because we have seen this kind of thing happen before. Whether it's going to be a repeat of this or not, we'll wait and see how the next week will give us more clues to this. But if it is able to break above 45.88, then it's moving higher, targeting the swing highs there. Although it could, this rally that we have seen with the ABCD and right at the 61.8% retracement, if it begins to close back into the range, it could be actually we could see a pullback right back towards this rising channel line here. Now let's take a look at the utilities. So wow, so look at the utilities chart. It's moving towards 84.44. So if someone is actually taking a look at some of the stocks on the long side, maybe utilities will provide a kind of a sector to be taking a look into. And this move is beginning to look parabolic now. In fact, it already is in this leg, and the chances are we are actually moving 84.44, beyond that 92.51 for the utilities. And if let's take a look at the staples. Staples had a week where you can see they sold off, so perhaps they didn't like the rate information, a rate cut coming in from the Fed. Let's see if we are going to get a continuation of it. And I would have thought it would actually go and actually reach the 85.63 target, but it came pretty close, 84.53. And there's a possibility that might be it, and we begin to see a pullback back into the trading range. But look, this has been a pretty strong move, and looks like it's done its ABCD here. There we go. Yeah, there we go. Right to the tip. Yeah, now when I draw the ABCD, it's not come to me as a surprise. I think it was getting into that zone where we could see some profit taking take place right at the ABCD. Now let's take a look at the XLY. And as expected, this is discretionary. A rate cut should help, and this is what it seems to be doing. We are also approaching the top of this channel formation. Also, ABCD getting to the D point of this move higher. This is where excuse me, our target has been around 196. It has achieved that. Now the key is whether it's going to be actually moving in the CD like higher, because off the back of the perception of lower interest rates, that should actually help the consumer discretionary stocks, because it will help with the rate cut, will help with the payments going down, and consumers having more disposable income to spend on more discretionary items, for example. So here there's a possibility we might be in the CD like higher. It's one of those sectors which has been depressed. So if there are actually investors looking for those kind of pockets in the market where the prices might have been depressed and reduction in interest rates might help those, it might be one of those. But the key thing is whether it's able to get above this 196 on the closing basis. I would like to see ideally two weekly closes above that. But if it does, then I think we are in the CD leg higher. But it has achieved our target of 196, which looked very difficult when we were here, but this is what the pattern was calling for, and we got that. And then let's take a look at XLV. This is the healthcare. We had a look at this previously as well. Now I don't know why. Technically, I can see why it didn't like the interest rates, because right at the 1.618 expansion. So it looks like we are going into a trading range, and eventually we'll break out of it, or maybe pull back slightly and catch up with the strong trending averages here. So it was doing quite well, but 3rd of September is where maybe this is the rotational aspect of it, of the market. So yeah, this one probably did not do that well compared to something like utilities. Now let's take a look at the XLI, which is the industrials. And industrials, they seem to like the rate cut, and looks like we are heading towards 141 level, which is the completion of the ABCD. So we are about maybe $700 below that level, so we'll keep on watching that. Then if we take a look at the materials, here we go. This is the XLB. It had a decent week, but it went back into the trading range after taking new highs, making new highs. It's still got a chance to do this smaller 95.77 kind of a level, but it appears to be going in more consolidation and coming back into the trading range. That's kind of interesting to see for the materials. And then if we take a look at XLC, which is the communication services, okay, now this is pretty good, but it does appear whether it is completing the ABC, this big ABCD here. So there you go. I think it's pretty much, it's very, very close to it, 91. So we'll just keep on watching it, and we could see some sort of retracement take place with this ABCD. Momentum is strong, especially after 5th of August here. It's getting better here for communications. XLK we had already taken a look at before. XLF, a really quick look on XLF. So here we go. because I'll be doing a separate video hopefully Monday on the financial sectors. So better looking close off the back of Fed's rate cut. But it needs to get beyond this consolidation in order to target 1.6 minute expansion right at around 49. While we are at, let's take a look at the KRE as well, because this is the regional banking index, smaller banks there in our trading range. Our target for quite some time has been around 61, 62. Perhaps it might actually get there eventually, but it is holding up. But it's you can see that it's a trading range behavior. Now I think we have covered quite a lot of for these sectors. Let's take a look at IHI, which is the medical devices. Now this is what we were looking at within the healthcare, and it looks like it's pretty good, because we can see that it has done an inverse head and shoulder, but last week with the interest rate announcement, it seemed to have sold off. So I don't know exactly for the healthcare, the medical devices part of it, what could be, whether it's sensitive to interest rate or not, I do not know, but seems to have not liked what happened last week in terms of the key economic behavior. Now, home builders. So let's take a look at home builders. So they should benefit from a rate cut, or the rate cutting cycle beginning, and then we have seen on the speculation of the rate cuts is done perform pretty well, since in fact it started to bottom June of 2022, and then back in October started this leg higher, but here it sold off quite a bit as well. So it looks like it wants to come back into this trading range to me, because of the 1.6 minute expansion. But this is like really smaller target that we had, just the expansion of this part of it. Still looks pretty good, and we have this we can draw a trend line like this. So it looks like it wants to come back a little bit into this trading range here, this strong looking weekly candle. Now let's take a look at, so let's take a look at the semiconductors. So semiconductors, here we go. After completing this big ABCD, just like the NASDAQ, it has pulled back a lot, and to me it is just I think it is actually starting a leg lower, but it's going to remain this trading range for quite some time, and similar kind of pattern we are seeing on Nvidia as well. I'm not gonna take a look at Nvidia in this video, because I already did that yesterday, and within that we have the SOXX, which is the semiconductor ETF, which is doing similar to what the SOX index is doing. Then let's take a look at the IBB, which is the biotech. You can see biotech is weak. It has had some of a recovery, but if you're an investor, you're looking to put your money somewhere. They're like utilities, which are making new all-time highs. That's a better place if you were to make a decision. And if we take a look at the okay, I don't have this index here. I think we have pretty much XRT. Let's take a look at this retail. Retail is very interesting. So look, retail is just not improving. It is just not improving, even with the interest rate information coming in. It's not. So we have seen an improvement in discretionary stocks, but the retail overall seems to be lagging a little bit, and it's coming right from this retracement of 50%. So keep on watching this space. It doesn't look a very interesting place to be at the moment, and most likely I think it's likely to come and test the bottom of this range. So this is entirely a trading range. We are at the top of this trading range here, and then the chances are, if we actually break below the smaller trading range here, below 70 for example, then it could actually come back and test the bottom end of this, which is around anywhere between 55 to 60 bucks here. But it also seems to be supported since the March 2020 lows, roughly maybe 61.8% retracement. Yep. So that is what it has held it thus far. So it's only getting below this, it'll become bearish, but it might just continue in this trading range. We might get to the top of the trading range, we come back to it, and we just keep on bouncing this in a pretty boring fashion for quite some time. So there you guys go. We covered quite a lot of things today. We covered the major indices. Oh yes, let's take a look at the Bitcoin. Yeah, not the futures, crypto, BTC, USD. Here we go. This is the one which we had been watching. This is the weekly chart of this, and you can see that how this 38.2% retracement has held it really nicely here. And on the pattern formation, we had this actually an extension to of 1.6 minute around 47,011. Getting below this is pretty bearish, but the market seems to have held this quite well. And in fact, this whole month of September has been where the market has recovered quite a bit. Now on the daily chart, here we go. Market actually broke above this trend line, which is good for the bulls, and then it is testing this gap formation here. Here we go. This is the gap. There we go. It's right into it. If let's go to the 1 hour chart, because last time I did the video, we were actually looking at this. So we had drawn this two trend lines. So this is the blue one is same as the trend line which is on the daily chart, and then this is where we have these 38.2% retracements coming in, and the market has been pretty strong following this. And there are a number of ABCDs. The market completed, then it retraced, and then found support from 38.2% retracements, and then it's moved into this gap formation very close to the highs of 26th of August. Now, there's a possibility that where we are now, we can in fact get a pullback, in fact. And if we were to draw a retracement of the lows of going back to 6th of September, and let's just draw the 38.2% retracement. Here we go. So we could see a pullback of about maybe where it is now, about $3,000 to about three and a half, even 59,685, which is where it'll bring this back to this trend line here, right to the 38.2% retracement. And if that is held, then I think we should actually see a pretty good formation of an A, B, C, D to the upside. If it breaks below this, then it's coming back into the range, maybe even test this lower part of it. So this is what we are watching in terms of the Bitcoin. With that, I'll leave you guys. So thank you very much for watching the video and the channel. And if you found this of educational value, please give the video a thumbs up. And if you like our technical analysis, how we look at the markets with the pattern recognition and Fibonacci retracements, extensions, expansions, projections, and then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. So have a fantastic weekend. Enjoy your day, evening, night, wherever you are, and stay strong, stay happy, and we will speak soon.